Hello, everyone. Thank you all for joining us today. Today, we'll be discussing how the venture capital funding environment has structurally shifted. LPs are consolidating commitments to fewer managers, emerging fund formation is accelerating, but capital isn't flowing evenly. This session cuts through the noise where capital is actually moving in 2026, why, and what it means for fund managers raising right now. We have three incredible guests with us, each coming at today's topic from a completely different angle. And I'd love to have them introduce themselves and tell a little bit about their backgrounds before we dig in. Blarina, would you like to start?
Yes, thank you. So glad to be here. My name is Blerina. You can call me B if it's easier. And I'm the founder and CEO of Tideborn Capital. I invest and advise startups. And I'm also a limited partner in quite a few VC firms. Nice to be here.
Thank you. Moses, you?
Great. Thank you for having me. My name is Moses Kusasira. I'm the founder and CEO of Paceoko Systems Inc. Been in the fintech industry for over 20 years, a serial entrepreneur, and currently running the CEO, running Paceoko for about 4 or 5 years now. And glad to be here. Glad to talk about this.
Awesome. Thank you so much. And of course, last but not least, Radhika.
Hi, I'm Radhika Iyengar. I'm a managing partner at Star Chain Ventures and really delighted to be here today. We're actually here to have a great discussion. My background is as a serial entrepreneur, but I'm also a top 100 Women of the Future, an eight-time founder at that, and turned into venture lab, and then which became into a venture fund. So really, really excited to be here. Advise startups we advised, 25 of them went on to raise about 900 million, and we had 4 billion, over $4 billion in shareholder value created. So really excited about bringing all of that background to what we're doing today.
Amazing. Thank you all so much for joining us. The topic of today, how capital flows in venture in 2026. Not theory, the tactical reality of everything. While we're going through this, please drop your questions in the Q&A box as we go. We'll be pulling the best ones live towards the end of the session. All right, let's jump in and start off with a bit of a reality check. If you spend any time on VC Twitter or LinkedIn, you'll see a lot of discussion about mega funds versus micro funds and LP allocations consolidating, bigger checks going to fewer managers. But from where we sit at Decile Group, working directly with emerging managers through programs like VC Lab, the funding landscape isn't nearly as grim as the headlines suggest. We're continuing to see meaningful commitments flowing into emerging managers. Today, we're going to unpack the current state of venture capital allocation from multiple perspectives, LP, GP, and founder, and talk about the fundraising environment and how it's actually evolving. More importantly, we're going to go a bit deeper on where capital is actually moving, why it's moving there, and what that means for managers who are raising right now. So, to kick us off, Radhika, as an emerging manager currently in the market, what have you experienced firsthand, and how does today's fundraising environment actually feel from your side of the table?
So macroeconomics, well, notwithstanding, like you mentioned, Max, a lot of consolidation has happened towards mega funds. What we see is actually a great opportunity for fund managers like ourselves. We are highly specialized. We are specialist operators, if you will. And we come with a really great background in the area that we're investing in, which is AI and blockchain. And that intersection is something that we actually envisioned in our book that we published in 2019. So this is a thesis that we've had out there for some time now. We are thought leaders in this area. And so for us, we've been waiting for the world to catch up in a bit. And now that it's here, there's a lot of amazing market indicators, which we'll get into, I'm sure, in our discussions forthcoming. But we as fund managers in this specific environment find it actually a great time for us. There could not have been a better time to launch our fund last year. We are moving ahead with investments like in Paceoko Systems with Moses leading the way for that. We really see amazing opportunities for us to be able to carve out a unique space for our thesis, for our fund. And there's a lot of excitement, just market dynamics wise, business wise for us.
Fantastic. And Larina, from an LP perspective, as someone actively backing these emerging managers, what actually makes a newer manager stand out when you're deciding who to back?
It's very similar to what I look at in startups as well. When I look at emerging funds, there's a lot of noise. So what stands out is why you, why now, and why in this particular market and why this thesis, right? So it's obviously I don't ask those questions directly, but sometimes I do. But it is kind of what I filter through as an LP. It is really important to understand these managers really understand the thesis through and through. They have a thesis to begin with, and they really stand behind it. They embody it. And it's not something that you can fake. It's something that you see immediately, that you understand. For me personally, there's also a human layer to it. So, how human are you with the startups, with the founders that you back? How big kind of is that territory behind you? And are you in the important rooms? And I want to pause a little bit on the importance of that room because for me personally, it's not the VC rooms of 10, 15 years ago. They don't look a certain way. They didn't go to the Ivy schools of certain years. Maybe they did, but it's not all that the room represents. So these are really important things to me that I filter through. And it is very critical as a limited partner to make sure that the managers that are kind of managing these funds on my behalf are making the right decisions with the startups, with the founders, and being in the right rooms and making the noise that I love to see. There's a lot of underrepresentation across women, minorities. Those are all things that matter tremendously to me. And when we back that up with the right thesis and a manager that really cares deeply about both returns as well as bettering humanity, those are things that hopefully are not just buzzwords, but I love to see them represented.
100%. It's very much like you said of being in the right room, so to speak. Venture capital has always been kind of an exclusive industry, but we're continuing to see these new managers and emerging managers successfully getting in those rooms as they kind of evolve shape, so to speak. At the same time, AI is changing the startup formation curve greatly, and companies are launching faster, reaching milestones sooner, and often requiring less capital to get started. So it's not that capital is frozen, it's just shifting and flowing differently. Now, I'd love to hear from everyone on this. Looking at the landscape today, do you think this trend towards smaller, earlier stage funds continues? And if so, where's capital actually moving right now? And what's driving those decisions and movements?
I can jump in if you'd like. I couldn't agree more than what Lorena just mentioned. It is a human side of the equation. And what I feel emerging managers, fund managers for smaller funds like ours, we're a micro VC fund targeting 10 million. What we're looking for is a couple of different things. Number one, it's just highly specialized in this area. We are very, very carefully curating the companies we get into and that we back. There has to be an incredibly high conviction around how they're utilizing this technology to create great value and also have great returns as well as great impact. So it's this profit with purpose that they're very much driving towards. I feel that smaller managers or smaller fund managers actually have an edge in this area. We actually focus on the human side of the equation. It's the value you bring every single day. Moses can comment on this, but we're always available. We're always available to help in whichever way we are needed to help. Our whole purpose is really to ensure that the companies we're backing are having everything at their disposal to succeed better and faster. And that's really the whole point. Our journey, myself and my colleague Jordan Woods, who's not on the panel today, but our whole journey up to this point has been about delivering value. And the value that got expressed, as I shared, in over $4 billion of shareholder value created, that just didn't happen by itself. It was because we also had a hand in the journey, so to speak, and very often in these earlier stages. So I think that value you bring every day is something that just sets you apart from everyone else. And I think that when you concentrate on human relationships, it is a human side of the equation. What we're looking for with our fund is actually not just us as fund managers. We have more of a collective. And so our LPs are part of this conversation. We're weaving a fabric, we're a network of people that are providing amplified value to our startups. One of our other LPs just became an advisor to one of our portfolio companies. So what we find, in fact, Pesoco. So, what we're finding is these crossroads of human connections, of value that is being created. That's really what's setting us apart from, some of the larger funds, which may, operate very differently from the way we do. For us, it's an everyday bring our A game to the table and, bring the value that we know we can bring. And if we know that we can't provide value, we'll actually walk away from a company and we'll say, this is not a good fit for us. So it really is about value creation and about the edge that we have, the knowledge that we bring in this particular area that makes founders reach out to us, actually. So this is a very much of a human relationship. It's relationship with our LPs. It's relationship with our founders. And that's really what we're really, I think, makes it so special.
I just want to add to that just a little bit of an anecdote, Radhika, if you let me. We were actually having lunch together before the investment in Moses's startup, and I'm not going to hide behind this anymore. I'm an LP in Radhika's Star Chain Ventures, so it's very very exciting about that. But going back to what you were mentioning about relationships and always being available. We were having lunch in downtown Palo Alto a few months ago, and Radhika and Jordan were literally shining when they were talking about Moses's startup. It was kind of a little bit on the earlier side, and they were telling us kind of everything about it and how excited they were to be. Radhika, you led the round, I believe. Is that correct?
Yes, we're
Yes.
leading the
So
round.
we were talking, and there is something to be said about a fund manager that shines when they are talking about the startups that they are planning on investing in. And Moses, I don't know if you know this, you have one of the largest kind of ambassadors in your startup in Radhika. So there is something very, very human about that. And Radhika, when you talk about those relationships, I can say, you feel them across the lunch table where we were, but also it's coming through across the screen as well.
Great.
Yeah, I'd just like to add on to that. Thank you so much there, and thank you so much, Radhika. It's a breath of fresh air, to have this kind of trust. It's always that trust problem, and when it comes down to the pattern matching, whether it's geographically pedigree, but working with Radhika and Jordan, we work closely together. So that changes the whole model. It's not all about just investment, but it's investment and advice to take us to the right direction, which is huge for us because in the space that we are in, we are breaking all the walls. It's we're changing how everything is done in financing, and so having that kind of advice from that standpoint and investment from that standpoint, it changes. It's a different kind of investment, and that's what Radhika was saying, investment with purpose. We are really, really excited to have them lead the round, and this is kind of like what we've been looking for a very long time. And we're great to be here with them.
Fantastic. So it sounds like a good amount of it is based around differentiation, whether that be personalities and visions matching and clicking, or rather the value add that an investor can provide to another organization. Radhika, you just went through a raise. What was the LP psychology that you encountered throughout? Specifically, what hesitations did you hear most, and what actually got them over the line?
Mhm. So this full disclosure, we're still raising. We are a public fund, thankfully, 506C, so we can actually talk about what we're doing. But I think, what our journey has been up to this point is not dissimilar to a founder raising capital. The earlier LPs who came in were friends, people, colleagues of times past. One of our first investors was a person who led the acquisition of Jordan's first company. So, you're talking about decades long relationships. Again, I want to concentrate on the human side of the equation. These are people who bring their conviction and their trust. Jordan, Moses, you also talked about trust, and that's a really big word for us. So it's trust through human relationships, and it's also from a area perspective that we focus on, it's trust through technology. So a lot of it is driving this high quality trust across the entire continuum of what we're building. And so, to your point, Max, or to your question, really what we've always approached it is we're just authentically ourselves. We're bringing us the way we are, online, in person, behind the scenes. There's no change. This is what we do. This is what we've always enjoyed doing. And I think that authenticity is, and then the incredible background that we have in terms of domain experience or sector experience that we bring to companies, to CEOs like Moses, who are already on the right track. But we see this as a big journey that we take together. So our LPs are now part of this journey, and they understand that. So what moves, I think, the needle for our LPs is exactly about the human side of the equation. We're always looking to drive more value. And on the value front, this is not something we just invented. I mean, it's actually models that have existed. I don't know if many of you may have heard of Chris Sacca with his first fund, lowercase capital. He took 8 million and then over 200x that in returns. Obviously, that's a great outlier model to aspire to. But when we looked deeper about what was the model that worked for somebody like Chris Sacca, it was all about relationships. It was always about founder first. It was always about the value that he brought to the table with his team. So I think that, there are examples like that out there. And while we aspire to deliver the greatest possible returns that we can do, we're also looking at models that have worked in the past. People who run funds, we talk to them as well. So I think it's a lot about, again, how are people driving value into the conversation? What can we bring to the table with our LPs, to our founders, and vice versa? We're always constantly learning from one another. So I think those are the kinds of authenticity points that I think make a difference. I think the focus on diversity is as well something that moves the needle with certain LPs. We are proud to back diverse founders. We actually think that diversity is a real strength. We look for people who bring a unique lens to what they're solving. Adeo said it best. I'll quote him. If you're solving a problem, you go build a company. If you're solving for a problem set, you go build a venture capital fund. And I think that's really what we've been all about. And we like that diverse perspective, bringing that edge and a different way to look at something, because that's really ultimately what's going to provide the greatest value to what we're creating as fund managers.
Makes sense. Florinda, does that match what you see from LPs in your network?
It does. It definitely. I mean, I'm head nodding here. It's certainly what I see on a daily basis and what attracted me to Star Chain Ventures. I think it's that network effect. And really, I'm going to go back to the thesis for a second, and really trusting, are these managers that embody those values and stick by their thesis. This doesn't mean that the thesis cannot change sometimes or be added to, but truly managers that can articulate, these are the startups we're going after. Here's why. This is the expertise that we bring to the table and how many years we've been doing this for. I think that is extremely important for me. I will come out and say I do not understand blockchain. Radhika and Jordan are working very hard with me to make sure that I do. But I trust them, and I know that this is something that they live and breathe, and that is really really critical for me. as an LP. The other thing that I want to mention here as well, not to take us in a completely different direction, but that level of transparency and relationship building is very important. Things will come up, things will happen, right? This is a long-term relationship. It's not just, for a month or a year. It would be nice if it were just for a year and those returns happen, but I know that things don't happen that way. So, that trust is extremely critical. And going back to when things happen and when something happens, I know that Radhika and Jordan and the funds that I invest in, they will just send that email, they will pick up the phone, and the conversations, the difficult conversations will be had. And these are, I trust that I am that kind of person, and I value that very much. And I know a lot of other LPs are thinking similarly. I value that very much in fund managers, the transparency, the open conversation, the here's what we're dealing with. Those are very important in early funds and subsequent years as well.
Makes sense. At Decile, we often hear this from LPs who are mentors that they're looking for authenticity and consistency. Radhika, I'd love to hear more about how you tactically bring that authenticity into all you do. And for folks here, even Radhika's Zoom background is on brand and intentional.
I think, I think authenticity is just being yourself. I mean, Blirian, you mentioned a great word, which is transparency. Um, you know, it's just simpler to be who you are, I think, right? I mean, you are who you are. It's not like you have to defend something out there. Your journey is your journey. You own that. It's your voice. And actually, we look at that as, these are the assets we bring to the table. So being ourselves is just something we've done always. Whether someone resonates with it or not, that's not really for us to say. And actually, I will say that in years past, when we had considered launching a fund, we'd actually walked away from numerous opportunities to do so because we didn't find either that the market timing was right or that the LP alignment wasn't there. So for us, alignment is really part of that authenticity. We're very unvarnished when we say that we're looking for values alignment. There's a reason why we ended up in with Decile Group and the VC Lab program. It's because of the Menserius Oath. Ethical investing is something we embody, we take very seriously, we embrace it. It's something that we've always practiced. Integrity, I think, matters. And so when we are authentically ourselves and we bring our energy and our passion to what we're doing, we're not creating something out of nothing. We're actually doing this day in and day out, and we're doing this because we actually love what we're doing. And I think, that consistency that you mentioned, Max, is really about showing up authentically every single time. And it's just easier to be yourself, isn't it? I mean, you're not trying to be someone else, which I think is very painful. So, being being very transparent, being very open, being authentically yourself, really, I think, creates those opportunities that we're looking for, and the edge that we bring with the founders we select are with that conviction. Lorena, you said, why you? Why now? I mean, these are the exact same questions we asked Moses, right? Why are you, Moses, the right person to carry the flag for what you're doing? And why is it that you're going to become a dominant force in this area because you bring an edge that no one else can, and that you've built something in a unique way that is very, very hard to replicate, or it'll take more time, more resources. So, I think that ingenuity, again, that human beings we're creative, innovative in the way that we're doing things. We try to bring that perspective as fund managers. Moses, you're bringing your whole edge on East Africa, leading in this space. So I mean, I won't get into a whole discussion about what you're doing, but you're bringing new rails and new mechanisms to traditional finance, which could only have been done, I would say, with the Kenyan perspective and Kenyan ingenuity, because you're working with basically, the whole mobile minutes model with M-Pesa. I mean, Kenya is light years ahead of the world when it comes to a unique way of looking at this, area. So I think Moses, we look at that edge and we said, nobody but you could actually build something like this, right? So you're bringing a DNA, you're bringing on the ground boots and knowledge and experience, and you're building your wherewithal to be able to deliver this across the finish line in the way that you are and succeed at it. And your customers, when we did our due diligence calls with your banking customers, that came through right away, saying they've never seen anything like it. And that passion and that ingenuity absolutely is something that we bring as well on our side. So I think that's how I would look at this is, what is that authentic self is really just marching to your heartbeat and to your knowledge base and being true to yourself.
100%. I've been with orgs where we tell our founders to, be authentic and lead with personality to differentiate. At Decile Group, we very much do the same with our VC lab managers to help them raise because, like you said, so much of it is based in trust, relationships, transparency, consistency, and that unique perspective and ingenuity that someone comes with. All of this also shows up on the operator side too. Moses, PaySoco exists because capital doesn't flow where it should. Could you walk us through the specific breakdown point? Where in the pipeline does access actually fail?
Well, if you look at the breakdown, it actually happens on the very top funnel. There's really no shortage of founders or even, early conversation. The failure happens really on the translation and in between the opportunity and the conviction. And usually, like we've been talking about, the trust problem, it's a big problem. It starts from there, right? And funders are used to fund what they are familiar with, right? And that's where the pattern matching comes, whether it's geography or school or networks. They used to fund what they're really familiar with, and that also brings out the data problem. If you don't have the right data, it's not like there's not enough data. There needs to be the right data. The funders like to get information the way they like to receive the information. And then the last piece is, like Radhika was saying, relationships. Relationships are, majorly, it's an important. We've built a relationship with Radhika and Jordan and their whole team for a very, very long time. This is not something that started, just a few days ago. They've been looking at us building this whole system from ground up, and them letting us be who we are and building it the way we think it should be built. Because what we built for necessity rather than just built for hype, and their thesis of investing in what matters is what really attracted us even to them as well because we want to change the world, and I know that's a big thing to say, but there's nothing great like building something that actually is changing the world. And when we do that and we see them, doing the same thing from a funder standpoint, the match happens, right? And so for us, it's all three things. It's from the trust, bringing the data together, and relationship. The relationship is the most important thing, actually.
Wonderful. And you mentioned briefly that a lot of it seems to be people investing in what they know. And Blarina, I believe you mentioned this as well in the sense of blockchain.
Yeah.
Um, how would you
Don't
say,
quiz me,
Moses?
Max.
Don't worry, I won't. Um, so this is all to say, when it comes to building that education, what do you find is the best approach to doing so? When we talk to managers as well as founders in building these relationships, we tell them to build for a 10-year plus relationship. When you're an LP or a manager investing in something, it's very likely, if all things go well, that you're going to be communicating with those people for the next decade at least. Um, Given that, Moses, I'd be very interested to hear as well from the rest of the group. What do most fund managers get wrong about the markets they say they're trying to serve? And how does education play a role in really changing that? Specifically, are there any tactics that the group has found works really well in educating versus some that fall flat?
Yeah,
Uh,
well,
Go ahead,
I'm
Moses,
sorry.
please. No,
No,
no, please.
no, go ahead. I'm sorry. Go ahead. Go ahead.
Actually, please go ahead. Max directed that to you, so I'll let you take it. Go ahead, and then I'll go right
No,
after
no,
you.
no worries. So, when it comes to education and educating operators from the part I stand, it's a huge thing because you gotta remember that as an entrepreneur, if you're first time or second time if you're second time entrepreneur, you probably already have gone through the process and understand what's really going on, right? If you're first time entrepreneur, you probably do need that assistant from the other side to understand, how to go about the whole fundraising bit of this, right? And so, if you get a group that you can actually work with from not just again, the financing bit, but also educating you on how to move around and how to get to the next level. That's a major, major thing for us. It's just like Radic and them, we actually turned down some of the investment that we got in because it doesn't match, right? You need to get funders that actually match your thesis. And this is a major thing for us. And I know once you get that, the match happens, education just comes as a second hand, or as a benefit that you just don't have to look for. So, that's how I think of it.
I love that. I think looking at that long-term relationship that you're entering into is amazing. And Moses, I also love hearing that you've had to say no to some checks because there are some golden handcuffs sometimes that I see founders taking on. So it is important to understand. And I'm glad that you are there. This relationship that I'm entering into for the long term, what does it mean for me? And are these people that I want across the table to be advising me, to be talking to me? And again, I want to go back to that making that difficult call or sending that hard email. Are these people that are going to stay with me in the trenches and really help me figure it out? And it sounds like you have that in Start Chain Ventures. So I really love hearing that. Um, the other thing that I would just add to it on in terms of kind of that ongoing education is concerned. One piece that I look at when I think about startups and founders is how they talk about competition and how much kind of um, homework they have done on competition. And I'm filtering for two things. A, have they done the homework? Do they understand the space? Can they really represent this is what we are filling in this universe, and why we belong where we belong, because there is a void and this is how we fill it. There are people around us and companies around us that are doing something similar, but here's why we stand out. So that's kind of the first piece. The second piece that I'm also filtering for is understanding, are they being kind and are they being nice and empathetic about competition, right? It's one thing to say, um, oh, we are the best, we dominate everyone, and here is why the rest of the companies are just have no room here. Um, I don't always respond very well to that because it shows the human side, right? It shows again your empathy as a founder. You are in their shoes, you understand how difficult it is to build, but at the same time you are highlighting just how you stand out and why what you are solving for is the right thing to be solving for, what doing that while staying human, staying kind, and staying empathetic. I don't know if I took us on a completely different direction, but those are kind of things I filter for when I talk to startups myself.
I think I'll just add to that a little bit. I mean, there's I think the human side that we've been talking about, but there's also I think just some facts that we also know. I mean, we're building this not just for the human side of the equation. I mean, absolutely for values alignment, 100%. But we're also building this for returns because this is not, philanthropy. There's another arm for that for Start Chain Ventures. We actually have a philanthropic sort of foundation that we work with, which is a very different purpose. But let's be honest. I mean, this is about maximizing returns. And I think that from a fund economics perspective, we're very, very conscious about the fiscal responsibilities we have to our LPs like Blarina and others that we have in the mix. We're also very conscious about the value we're providing. So there's multiple things we're trying to do, and there's actually mechanics that we've actually modeled all of this. And if you look at the statistics, smaller funds, micro VC funds, actually outperform mega funds. So mega funds really are 2 to 2.5x is really what they can probably do. It's going to be very difficult for any one of their portfolio companies to deliver more than that because they are mega funds. It's really hard to find the one company or so that is actually going to return a fund that size. For us as micro VC fund managers, it's that much easier. We're aiming for the 5 to 10x range. We'll probably hope to end up somewhere in that mix, maybe 7x. That would be a great number for us. And again, we're curating these portfolio companies. We have high conviction in Moses and his team and Pesoko to know that they have everything. All the ingredients are there. It's like baking a cake. You pick the best quality ingredients, you put it together, and you follow a certain recipe. You follow a roadmap for success. And us as fund managers, we're kind of guiding in that baking process in how the recipe comes together so that you're trying to get the best cake out of it, basically. So we're carefully curating these deals, and we're very, very rigorous about evaluating. So when we do our DD calls and we actually hear from customers about the competition, about what Pesoko is doing far and above, away, better than the competition, we take note. These are things that came through not because Moses, you and your team were talking about it, but because your customers are talking about it and saying, well, we've got this other thing and we don't really want to do this anymore because we get everything and more with what Pesoko is offering. And I think those are the kinds of proof points we look at. Everything is driven by, I think, analytics. Everything is driven by proof points. We are very, I would say, dispassionate when we look at this because human chemistry aside and values alignment aside, it has to make sense. Just the construct of what we're looking at. And so I think that it's part science and part human interaction, I would say. You've got to have the right analytics to back it up, the right proof points to back it up. And if the fundamentals aren't there, then you kind of work with it and say, okay, what do we negotiate here? We've got to come to an agreement on something that we can negotiate and saying what's reasonable, what's valuable, what's tenable, and what is going to set this thing up for ultimate success as well.
I think you hit the nail right on the head there, so to speak, that there's really two sides to it. There's the financial side, where at the end of the day, it is an asset class ultimately, and people make decisions based around that. But there's this whole other side that is like this personal framework, so to speak. And I'd be curious to know when both talking with founders as well as LPs, do you see the conversation around ROI change based on, I guess, the topics being discussed, so to speak? So, for example, if someone is to lead mainly with that fiscal return versus personality, how would you say that changes the conversation?
Um, I don't know that it really changes it. I think it's sometimes educating LPs because they might be only looking at one side, not the other side. We're really looking at a Venn diagram, a very unique personality. We look for LPs very proactively with the right ingredients, with the right profile as well, because we know it's a lot about match. But there's a lot of education that happens along the way. So if they're only focused on the ROI, that's cool with us. We're also focused on ROI. So there's no mismatch there. We're not trying to underdeliver in any way. We're trying to, maximize our performance and and it's very intentional and deliberate in the way we're constructing our portfolio. So there is an alignment already there, but there's also alignment in terms of the values that we're upholding, the people that we're backing, because it's a people side of the story. So when you have values alignment at the very foundation, everything else just gets built on top of that. We feel that if we don't have the values alignment at the foundation, it's like building the skyscraper and you've got a bad foundation, the thing's going to crumble at some point. So we want to build this for durability, We want to build this sustainably. We want something that is actually going to grow over time in value and not something that's going to have all of that risk. And, a lot of things can go wrong. So we are very highly specialized in this particular seed stage because that's an area that we feel we can best succeed in. We've played in other stages as well through our venture lab, but this is the area that we feel we bring the most value in. And when you're building this with alignment around trust, transparency, around the fabric of human connection, I think it's really strong. It's something that we're very excited about doing. But make no mistake about it, this is about high returns. This is about delivering what we seek to deliver. We're delivering a product, and that's returns at the end of the day. And we're very, very conscious of that fiscal responsibility that we have. But we are going to select with that in mind and then filter down through the many different metrics that we look at and the many different axes that we're evaluating on.
That makes sense. Shifting gears a teeny bit here, just it made me think that duality between ROI as well as the kind of personal relationship fit of it all. We see that founders, we see that with VCs and how LPs approach and navigate that. And we also see that, of course, with partnerships, sponsorships, and deal making in general on the corporate level. Blarina, you spent 14 years at Google structuring $2.5 billion in partnerships before becoming an investor. How did that operating lens change how you evaluate a deal or influence it?
I did do all of that. It was a very exciting time. And I moved on to the startup world because I got even more excited about all the innovation that I was seeing in the space. The change that happened for me was really filtering for that navigational intelligence that I really like to see in both founders, startup founders, and also fund managers. What that means for me is outside of just the very rigid deals, the numbers game, the ROI, which obviously needs to be there. Radhika, I'm 100% behind that, and I love hearing that. The other piece, though, that is also really important, and I learned in big tech, in big corporations, the personality that I gravitate towards is the one that is making decisions, but is also able to see around the corners and to change direction when that necessitates it. And so it goes both ways, right? For a founder that is looking around the corner and trying to understand, actually, we need to pivot here. This is what our customers are telling us. This is what the competition is telling us. There is kind of that rigidity of this is what we said we stand for, so this is who we need to be. That sometimes I see founders and startups landing in some very hot water because of we said we were going to be X. So again, going back to kind of that navigational intelligence, seeing around corners and being able to say, this is how we're going to shift now and how we're going to take from the industry and where customers are leading us. And I appreciate seeing that in fund managers as well, because it shows me that you do have that flexibility, that at all times you are aware of what is happening in the space, and it's a very dynamic space. It's getting more and more dynamic every day. So that kind of coachability, allowing yourself and being able to have those hard conversations with yourself when you need to across both sides of the spectrum. Those are things that I appreciate. And going back to kind of deal making and being able to do so for a long time, that is the one thing that kind of I carry forward to how I have the conversations today.
And given your approach, are there any deals that you've specifically passed on or took because of that background that you have and that unique perspective?
Yeah, I did. There have been many deals that I have passed on, and there are others that I have, obviously I've taken as well. I do want to go back to the competition piece. I get very I get a little, I don't want to call it frustrated. I get a little disheartened when I hear founders and also kind of fund managers as well just speak down about competition, right? It just I don't know why it's a very big turnoff for me. Um, so that is immediately something that I respond kind of very quickly to. There's again, we can all be friends. It's one thing to do your homework and to understand this is the space that I play in, but let's also kind of find a way to do it in a way that doesn't speak down to startups and other founders around us. So that's an immediate kind of almost an immediate no for me when I hear that very harsh way in which founders talk about competition. Um, another piece of that is, um, and I back kind of at the seed and the pre-seed stage, but not really having a sense for the go-to-market strategy is also a little bit of a question mark for me. It's not an immediate no, it's just a question mark. If we haven't thought about how are we going to get there in year two, year five, let's not go in year 10 because it goes directly in contradiction with what I said about seeing around the corners and being able to adapt. But a go-to-market strategy obviously is critical. So if we haven't thought about that and we are vibe coding and we are building for, let's see where this product takes us, not the best thing that I love to see. What I do back and I get very excited about, and I see it in Radhika and Jordan and how they have built kind of Star Chain Ventures, is the founder conviction. I lean in immediately when there is a personal story that the founder has built from. And I've said this in a couple of conversations that I've had, so I'm going to be a little repetitive here, but when the story becomes, I felt this pain point firsthand through XYZ. As a result, this is what I built. That is an immediate yes for me, because the ROI will be there, Radhika, and the the returns. I'm convinced the returns will be there, but there's also that passion of like I will not back down because this is really really important to me, and I have also found a team around me that I have brought along for the ride, and I have been able to show them that conviction.
Mm. Can I just add one thing? And this is, I'm going to compliment you, Moses. Bluria, you talked about being able to look around the corner. I'll say, Moses, you're masterful at that. I think, what I've seen, and I know Jordan has seen longer than me, actually, with you. We've consistently seen how the stuff you're made of, which is both, resiliency born out of conviction as well, but then being able to look around that bend and see what else is happening. You're very aware, plugged into what your area looks like, and you're always kind of looking around that bend. I think that, that to me has been always a very consistent strength, and I've always appreciated that. We've always appreciated that. You're very customer centric.
Mhm.
You really pay attention to what your customers are telling you, and all of the quote pivots or the next areas that you're focusing on at Pesoko come in fact from your customers, because it's your customers kind of pulling you in that direction, which to me makes a whole lot of sense because it shows that you have ear to the ground, listening very carefully. And that came up in the DD calls where your customers were telling us they really listen to what we need. And that came up multiple times on multiple calls with multiple people. So that's a message that, we look for is what are you consistently doing as a founder day in and day out to serve the needs of the customer? And those who serve the customer best and those who win the trust in the long game are really the ones that are going to be able to establish market leadership. I mean, that's really a given, but it comes out of the customer centricity. A lot of people, make the mistake of build it and they will come, right? What you've built is something extraordinary, but you say you built it out of necessity, but you actually built it to be able to do something that you needed to do with a particular project with the Gates Foundation that you were involved with. And you built it because you needed to operate. And then you realize, wow, we just built this thing in order to be able to operate, to do this. And by the way, this is an amazing product we built along the way. So I think, you're very modest when you say you built it out of necessity, but that necessity was really because you were operating in Kenya and you were doing certain things and you built this software and this platform designed it was purpose built for that purpose, right? For that task that you were trying to solve. And now your customers on the US side of the fence just are lighting up because they've never seen anything like it and they haven't. And that's something that is true differentiation. You have to have competition because, markets need that, and the best will always win because when you're placing your road, kind of figuring out your roadmap based on customer movements, I think that's really the most intelligent way to go about it. And I think, Moses, you have a real gift in being able to listen to your customer.
I love that.
Thank you,
Mm.
thank you, thank you.
I do
Uh,
as well.
yeah.
So we've covered a lot of ground so far, and I want to make sure we get to some of these Q&A questions, 'cause some of them are really great. So let's close by looking ahead. If everyone had to bet on one structural change to how capital flows in venture over the next 3 years, and not a trend, but an actual shift, what is it, and what does it mean for the managers who may be on this call?
Decile Group. I'm going to make the big plug because I think Adeo's vision, and it's not just Adeo, it's Adeo and Mike and the whole team. It's the vision to create new pathways in venture where none existed before. It's remaking this space in the way that people from all manner of backgrounds, specialists and operators, absolutely leading the way. It's not about pattern matching. And if you look at the statistics, that's also bearing out 90% of unicorns don't follow that pattern match. So, we're bucking the trend collectively in the Decile family because we're all very much focused on how we bring our specialized knowledge and skill sets and edge in the areas that we're operating in and our ability to look beyond, around the corner, as Valerina you said, is really about finding the opportunities that no one else is seeing. And they're not going to see it because they've not really been specialists and operators in those areas. So I think it's domain and sector and specialist knowledge that is really driving this new wave of venture capital. We couldn't be more excited than to be a part of this family of funds that are being launched by Decile Group because we're all specialists in our own right. And we all have our lanes where we're playing in. And it really is about abundance of all of us doing the many things we're doing in the ecosystems around the world. So this is about not just one single narrative, one single play in one little area or big area of Silicon Valley. This is about going well beyond those borders and really taking that vision. We couldn't be more exciting because we think that's the wave that the world needs. And who needs more handouts in far-flung corners of the globe? What we need is backing innovation across the globe, and we couldn't be more excited than to be a part of that story.
I love that. I'm excited about kind of looking at markets that traditionally have been dismissed. I say that as an immigrant that landed in the United States at the age of 18 from Albania. But there is something really, really exciting about the next wave of just looking at those markets. It fills me with so much gratitude for where this is going. I know AI, we didn't talk about a lot about that, but I know AI is going to play a critical role there. And yeah, I'm very excited about the future and those markets. I'm keeping an eye on. It's exciting stuff.
Yeah, and I think it's great and what Radhika said about the Decile group. It comes down to breaking that barrier on pattern matching. We've lived it. Me personally, I've lived through that, and thank you so much, Radhika, for the pivot. I'm always studying. I'm always listening to the customer. And I'm always trying to figure out how do I deliver for the customer. But when it comes to funding, it's been always about a lot of funders have been focused on that pattern matching, and this is breaking that whole barrier, and that's a big deal for founders, mainly first-time founders that are from different backgrounds. And we really are happy to see that, and I'm pretty sure this is gonna go far away.
Can I
Then,
just add too, and this is a plug too, again, what Adeo says is that your vision, Adeo, is I hope you're listening. I'm sure you're listening, but you talk about VC as a force for good, and that moves the needle for us because we're all about positive change in the world, and when you have diverse perspectives leading a new force in the world and a new force for positive change, well, that's what we need. We have a lot that's not going in that direction. So, there's things that we can do. We might not be able to control those kinds of geopolitical kind of forces that are at play, which are causing great harm across the globe. It just doesn't make sense to us. But, that's not our wheelhouse. This is our wheelhouse. Our wheelhouse is technology. Our wheelhouse is venture. This is where we know we can shine best. So, focusing on our strengths and our assets and what we bring every day to the world. I mean, we can all collectively create that force, and that's the vision that we absolutely were drawn to with VC Lab and Desal Group, and it felt like we had found our tribe because we have.
Mm.
well, thank you so much for the plug. We didn't plan that or anything, just FYI. Um,
That's just
so,
authenticity, Max.
well, I would love to move forward with some Q&A, just to make sure these questions get answered. The first one we have is from Roberto Neves. Hello, Moses and Radhika. How do you see fintech evolving with AI, and where do you expect the most innovation to come from?
Good question.
Ah,
Moses,
good question. Good question. Good
it's your
question.
floor.
When you take AI and actually combine it with blockchain, magic happens when it comes to the fintech world, and mainly from this part of the world. You're able to do things that you've not been able to do previously when it comes to actually doing credit scoring. Because the current environment is still based on this old, you know, credit scoring mechanism, and that changes when it comes to different type of the world where you don't have data, right? You don't have the big three, you rely on mobile data, you rely on how money moves in, money moves out. By utilizing AI, you're able to change that whole mechanism, and that in itself gives the ability to provide more funding for different businesses. And I'm not going to say what we do, but if it we've combined the data aspect of it and the blockchain aspect of it, and you put that AI in the middle, it basically changes the whole view of what a microfinancing or a bank could do, because now they get newer products that never existed. They do de-risking, they bring down the risk environment because now they can get more data and automate some of these things that they do. In some cases in the US, it takes about 6, 7, you know, systems to do this, right? By adding that AI and blockchain, you able to bring it to one. You don't need 6, 7 systems to do all this. And because you have that ability to automate some things, you're able to now also increase your profits because now you're able to tap into a different market that you were not able to tap into. You're able to tap into even the micro nano level market. And we could not do that before. Before AI, before blockchain, it was impossible. And so it's very exciting what's possible, and the surface is just being scratched right now. And there's a lot of other companies that are coming out as well that are seeing this whole trend, and we're excited to be, in the mix as well.
That was great, Moses. If I could just quickly add, I mean, we see AI and blockchain as a real powerhouse combination, like you said. It's magic. It is not just magic, it's actually this area is seeing there's trillions of dollars of opportunity actually in this space. And this is what we're seeing. And we regularly put thought leadership posts out there. If anybody's interested, you can check out our LinkedIn posts. But we are seeing very much these new opportunities are driven also by regulatory tailwind. And I know that's a big topic to add right at the very end of our conversation. We didn't really get into it. But what we're seeing is the Genius Act and now even the latest iteration with FDIC kind of, in specific ways where it's being able to be backed by stable coins, for example. I mean, these are tremendous regulatory. We predicted this in the book that we wrote, Enterprise Blockchain Has Arrived. We wrote that in 2019. We had a vision for how this would unfold. And indeed, it's happening today. So having regulatory clarity now around new ways of doing things, not because it's some hype mechanism, but it's actually bringing new rails, making things much more efficient, making money move faster, making it safer to do that. That's something that, every customer of Moses's, every bank, every financial institution, and anybody that is really in this finance area is looking at very closely and saying there's a new way to do things better, faster, cheaper, and safer. So I think, when you've got that kind of foundation being built and you've got trillions of dollars of opportunity, we see our fund being very uniquely positioned to be able to take advantage of that.
Fantastic. It looks like we're about at time. So, Blarina, Moses, Radhika, thank you so much. This conversation was exactly what Cohort 20 needed to hear. To summarize very quickly, capital is moving and can be a force for good. To Radhika's point, at the core, venture is a relationship business. And we heard this in Blarina's framework for evaluating emerging managers. It's all based around why you, why now, why this thesis. The future is bright. And with that, thank you to our speakers again today. And I'd just like to give one last push to our audience. If you walked away with one name you want to reach out to this week, reach out to them today. The LP who believes in why you're building this fund is out there. You just have to go find them. Again, thank you to all of our amazing speakers, and thank you for everyone for joining us. And we'll send the recording out sometime later today.
Thanks for having
Thank
us.
you.
Take
Yeah.
care. Bye.
Thanks,
Thank you,
everybody.
everyone.
Bye.